Forget tiny shoebox-sized condos that drain cash every single month. Toronto is all about multifamily investment opportunities these days, and one new strategy that's really creating a lot of buzz is the 4+1 approach. Now, in a nutshell, if you buy a house and convert it into 4 units in the main house plus a backyard house, that's 5 units total, maximizing density on a small Toronto lot, and then you can turn it into a real cash cow. But here's where it gets really interesting. You do have the option afterwards to refinance with the CMHC insured commercial mortgage and pull out up to 95% of the upgraded value. Game changer. And this is ultimately the win-win. More housing for our city and potentially big returns for you. Now, sounds too good to be true, right? What's the catch? How much are these properties actually worth afterwards? And what's the smartest exit strategy once you're done this? Well, we're going to be diving into all of this in this video. But before we do, don't forget to like this video and subscribe for more tips on Toronto real estate investing. First off, let's talk about why this is such a big deal. All levels of government are pushing this these days, and Toronto is doubling down on it. Olivia Chow, our mayor, put it perfectly. Toronto is growing. We need new ways to house more folks in our neighborhoods, and part of this is allowing more missing middle housing on residential streets. Let's break it down. The government is now allowing 4plexes and ADUs throughout Toronto residential areas. And naturally, you might be asking, how do the numbers actually stack up? Well, let's take a closer look. Imagine buying a standard bungalow in Toronto for $1 million. You put in $1.3 million for the 4+1 build, and you add another $300,000 for holding costs. Now, this will bring your total investment to $2.6 million. Now, here's the exciting part. With a 4.25% cap rate, which is a common way to value commercial real estate, this property can now be valued at $3.5 million, giving you a $900,000 lift. But hold up. Let's talk about the make or break factor, construction costs. If you manage the project yourself, you might cut the cost down to around $250 per square foot, and that's how we got to the $1.3 million construction number. If you do hire a GC, these costs could skyrocket to $400 per square foot or even more, and that massive value add lift that we were looking at can potentially become neutral or even a loss. So as you can see, cost of construction and the accuracy of this cost is actually super important. So let's say you got that number down and the numbers make a lot of sense to you still, and you want to figure out the best way to cash out once the project is done. Well, there are options. The first way is that you can try to sell the property, and on paper we know it's valued at around $3.5 million, but reality check, similar properties have been listing at $3.3 million, and even at that price, it is tough to sell still. Why? Well, first off, these projects are new and not many of these have been done, let alone being sold, and these price points are very high, and with today's cost of capital, there are definitely a lot fewer buyers in this range. Let's just say you managed to sell at $3.3 million. You're looking at $700,000 of gross gains and a lot less after fees and taxes. Another option that our builder clients are asking about are condo conversions, since they are more used to selling luxury builds, and this option hits closer to home for them. Splitting the units and then selling them as condos can potentially fetch $3.7 million. One thing to point out is that this condo is technically a 3+1, but the biggest unit is built with an in-law suite in mind, so essentially it can be looked at as a 4+1. But hold up, this route does come with extra costs. You're looking at higher carrying costs due to a longer project time, an extra $150,000 for the condo conversion process, and more money for higher end luxury finishes that buyers expect. So your total cost does jump up to around $3 million, and with a $3.7 million sale price, you're left with a $600,000 gross gain, and again, less after fees and taxes. And so the most popular exit for these 4+1s has got to be the refinancing strategy using CMHC's MLI Select program. With this example, you can cash out the most out of the 3 options, and you won't be hit with taxes or fees like what happens with selling. And you can continue to keep the property, enjoy monthly positive cash flow, and benefit from long-term appreciation as well. Now, this might seem simple on paper. Every single residential lot in Toronto allows a 4+1. But really, finding the right property for this isn't as easy as it seems. You've got a lot to consider, like lot size or other factors, to make sure the 4+1 actually makes sense. And getting the numbers right is really the tough part. You'll need to figure out how to finance and build, what features to include to get the best returns, how to build it, and how to strategically refinance to cash out as much as possible once everything is done. All of this has to be done properly if you want to see a strong return, and that's where our team steps in. If you're interested in learning more about these and seeing our top picks for these types of projects, just book a call with us using this link here. We're a real estate sales brokerage in Toronto that specializes in buying and selling homes, particularly multiplexes in Toronto. So whether you're looking to buy a ready-to-rent out multiplex, or you need help converting or even building one in Toronto, we've got you covered. Here's how it's like to work with us. We'll get to know you and your goals, and then help you find great deals and eventually help you choose the best opportunity for you. Need renovations or builds? Well, we've got trusted contractors to help you out with this, and we're always around to coach you as well. Plus, we can handle renting out and managing your property too. Ready to get started? Just head to this link here and let's chat.